Guy asks, hi, when trading reversion, do you use leverage? If so, how do you select your choice of leverage according to P&L, or what other factors do you use to make that decision? Okay, so I wrote a tweet about it here. Leverage has no impact at all on P&L whatsoever, meaning a 100k position is still a 100k position, even if you use 10x leverage or 1x. Meaning, if I open a 100k long position on Bitcoin and then it pumps 10%, and then some other guy was in a 100k position with 100 times leverage, at the end of the day, we're both going to make the same amount of money because the position size is what determines your P&L, not your leverage. Your leverage only determines how much margin do you need to actually enter that trade. So how much collateral are you putting up to the exchange in order to execute that trade? Leverage, and this might sound counterintuitive, but leverage is actually a tool to help reduce your counterparty risk. So it is a tool to help reduce your risk, not to increase it. It is a tool to reduce it. And specifically the thing that we are reducing, like which risk are we reducing by using leverage? We're reducing counterparty risk. So what I mean by this is, let's say this is my wallet. This is my wallet. This is the exchange. I will only have 10% on the exchange, and then I'll have 90% of my trading account in my wallet. The reason for this is because it's crypto and it's the Wild West, and an exchange can go down at any time, or they can rug, they can hack, or get hacked. They could do some other nonsense. Like, how many exchanges have we seen go down? How many hacks have we seen in the past 5-10 years? Like, I got hit really heavily in FTX, and that's when I like really truly learned my lesson to like not have an excessive amount of money on the exchange. So therefore, I only want to have a small amount of money on the exchange. Now, to compensate for that, since I have a low amount of money on the exchange, but I still want to have access, like I still want to use the other 90% of my trading funds, what I do is I use leverage to compensate for that. So if I have 10% of my account on the exchange, I'll crank up the leverage to 10x so that I can access these funds. So, okay, so for example, let's say I only have, let's say I have 1,000 on the exchange. I have 9,000 in my wallet. If I use 10x leverage, it's going to feel like I'm trading with $10,000. And whenever this balance gets low, I'll just top it up from the wallet. Whenever this balance gets a little bit too high, I will withdraw and return it back to the original wallet. That way, I can still trade with my entire funds that I want without actually being exposed to the exchange. So if in the event that the exchange goes under, I'm only going to lose whatever is on the exchange, and whatever is in my wallet is still safe. So what I'll do for you is I'm going to link you this post. I'll put it in the description. I'll also put it in the pinned comment for you to read. The other thing that I'll do for you is I will link you my my risk management guide. I have a whole article on risk management. I'll link that over to you as well. That's really going to help solidify like all the basic stuff about like leverage, margin, position size, risk, etc. Anyway, thanks for the question.